So the AI theme is driving equities currently. What is interesting is that you have great AI plays in EM that often trade at a discount to their developed markets counterparts.
Hello from Stuttgart. We're here today at the Fonds Congress in Stuttgart, and with me is Emmanuel Hauptmann from RAM. Hi there. Nice to have you.
Hi, good to meet you.
And we want to talk about the emerging markets today. Where do you see kind of investment chances in the emerging markets, and what's kind of the status quo for emerging markets from your opinion?
So emerging markets are very attractive today. We have valuations that are very compelling versus developed markets. The whole capex frenzy in developed is eating away on the free cash flow yield of developed equities, when emerging markets become, in many ways, the quality value play in equities. So we think there's a very strong upside for the asset class currently.
And then many investors are focusing on large caps, on AI stocks at the moment. Do you see that it's kind of a chance for emerging markets, or maybe even a risk for emerging markets?
So the AI theme is driving equities currently. What is interesting is that you have great AI plays in EM that often trade at a discount to their developed markets counterparts. If you look at GPU, memory manufacturers, they trade at a deep discount in EM versus developed. So that's a very interesting theme in the large cap, mega cap play. At the same time, you don't want to focus just on these opportunities, and the market is all in just on these opportunities. It creates a big concentration in the emerging markets index currently, and great opportunities outside of these large caps. So we invest across a wider set of opportunities. We like to diversify our exposures and our bets, and invest in great mid caps in other industries than just tech.
Active management is currently a bit under pressure because especially of the kind of passive investments. How do you want to generate kind of sustainable outperformance and alpha with your strategies?
Actually, emerging markets is a great place to do so. Since 2009, we've generated more than 5% outperformance annualized in the strategy. So long term, there is a way you can capture great opportunities in EM if you are selective, if you have this quality bias we have, and we have that with a lower risk than the market. So our aim is to have a better downside capture than equity indices. So we have a quality bias that provides great downside capture, so around 70%, and helps us compound very nicely on the EM growth over the long run.
Let's have a dive into your portfolio. How are you positioned at the moment?
So currently, with this very big concentration of the index in tech, so tech is our first exposure, but it's a big underweight for the fund. We have large overweights in consumer staples, in healthcare. There you can access names that still have growth, and you have good positive demographics in many EM countries that bring that growth in staples, in healthcare, while still having very attractive valuation levels. If you look at our stock selection today, we have more than 8% free cash flow yields in the selection. It's a level of income, of yield you don't get anywhere else practically in the market today. So if you're selective, you can find quality, value, and growth in this space.
With an active investment approach, says Emmanuel Hauptmann from RAM. Thank you very much.
Thank you very much.